Security Analysis by Benjamin Graham, and David Dodd is one of the most influential and comprehensive books on value investing. Originally published in 1934, it lays the foundation for fundamental analysis and provides a framework for investors to assess and value securities based on their intrinsic worth. This book, written during the Great Depression, continues to guide investors seeking a disciplined, analytical approach to the stock market. Investment versus speculation. Graham and Dodd make a clear distinction between investment and speculation. Investment involves thorough analysis, seeking safety of principal and adequate returns. Speculation involves taking risks without sufficient analysis. Investors are advised to focus on intrinsic value, which is determined through detailed study of a company's financial statements and operations. The margin of safety. One of the cornerstone concepts of value investing is the margin of safety, which refers to buying securities at a significant discount to their calculated intrinsic value. This buffer helps investors mitigate risk from market volatility, poor company performance, or analytical errors. Intrinsic value. Intrinsic value is the actual worth of a company based on its fundamentals, not its current market price. Graham and Dodd emphasize calculating intrinsic value through careful analysis of earnings, dividends, assets, and growth prospects. Analyzing bonds and fixed income securities. The book extensively covers the analysis of bonds, focusing on the issuer's ability to meet interest and principal payments. Factors such as interest coverage ratio, asset protection, and earnings stability are critical in determining bond safety. Common stock analysis. When analyzing common stocks, Graham and Dodd emphasize evaluating earnings power, which is sustainable profitability over time, dividends, looking at a company's track record, and policy regarding dividends, book value, which is the value of the company's assets. They advise against paying speculative premiums for growth expectations, preferring a conservative valuation approach. The role of financial statements. Investors must analyze financial statements, balance sheet, income statement, cash flow statement, to evaluate a company's financial health and prospects. Special attention is given to assets and liabilities to assess book value and liquidity. Earnings trends, as consistent and stable earnings, indicate a strong company. Capital structure, which is the proportion of debt and equity financing. Market fluctuations and stock pricing. The authors argue that market prices often diverge from intrinsic values due to irrational behavior, herd mentality, and temporary sentiment. Investors should take advantage of undervaluations caused by these fluctuations. Types of securities and special situations. The book covers various securities, including preferred stocks, hybrid instruments combining bond and stock features, special situations, events like mergers, liquidations, and reorganizations that create profitable opportunities. Graham and Dodd explain how to analyze these securities for potential gains. The role of the analyst. A competent analyst must adopt a rigorous, skeptical, and conservative approach. They stress patience, discipline, and the need for detailed and dispassionate analysis, rather than relying on market trends or speculation. Major themes and lessons. Conservative analysis. Investors should prioritize capital preservation and conservative valuations. Graham and Dodd urge investors to be realistic about company prospects and avoid overpaying for speculative growth. Fundamentals. Over price action. The authors emphasize that the market price of a security is not always indicative of its true value. Fundamental analysis provides the tools to uncover mispricings and act with confidence. Avoiding overvaluation. Investors should avoid companies priced at unjustifiable premiums to their intrinsic value, even if the growth outlook seems promising. Independence of judgment. Successful investors must avoid following the crowd and make independent, fact-based decisions. Adaptability. Graham and Dodd recognize that no single investment approach works universally. Investors must adapt their analysis to different types of securities and economic conditions. Key takeaways for modern investors. Deep analysis wins. Investors who perform careful, rigorous analysis gain an edge over those who rely on market speculation. Discipline and patience. Value investing requires patience to wait for opportunities and the discipline to stick to a strategy. Focus on fundamentals. Investors should concentrate on earnings, assets, and dividends rather than market hype or volatility. Risk management. By ensuring a margin of safety, investors protect themselves from catastrophic losses. Who should read this book? Value investors, individuals who want to learn the principles of value investing and fundamental analysis, analysts and professionals, those seeking a systematic approach to evaluating bonds, stocks, and special situations, serious investors, anyone looking for a long-term, evidence-based method to navigate markets. Impact of the book. Security analysis has influenced some of the greatest investors of all time, including Warren Buffett, who considers Benjamin Graham his mentor. It set the foundation for value investing, focusing on long-term wealth preservation and appreciation through disciplined research. Final thoughts. Security analysis remains a timeless masterpiece for understanding how to analyze and value securities. Graham and Dodd's insights provide a disciplined framework for navigating markets, managing risk, and achieving sustainable success as an investor. Hit the like and subscribe. It helps grow the channel. Thank you.